slow and steady wins the race, but you're going to start seeing more money pour into these sectors.
So Kevin, 2016 seems to have been a very volatile year for markets, but it's been a golden year for precious metals such as silver and gold. So maybe you can start by just giving us an overview of how silver and gold has performed so far this year.
Well, thanks. Yeah, we've seen the yellow metal, the gold and silver both outperforming this year. 3-year highs we're reaching. A lot of this is based and been driven by the uncertainty over the elections in the U.S. between Donald Trump and Hillary Clinton now. And of course, Brexit, with Britain leaving the EU and a lot of uncertainty in the EU. And of course, on top of all that, all the terrorist activity, which creates more uncertainty in the world as well. Throughout the world. So all of those elements make investors nervous, make individuals nervous, and they start to look at the safe havens, which really are silver and gold when it comes to what we consider options for currency hedging. And so we've seen a lot more activity actually in silver, which I think is really encouraging. And yet we haven't even scraped the top of the barrel yet. We have plenty of more buying that could come in. We're certainly seeing strong buying out of China and elsewhere in the world, and we could see a lot more of it as this uncertainty grows with the election year cycle and with the EU situation as well.
And you mentioned barely scraping the barrel there, which is really interesting when you look at how oil has performed in the last 12 months in comparison to silver and gold. So why has silver and gold performed so well compared to other commodities?
Yeah, again, the thing with oil has not come back, and it probably won't come back to the levels $65, $70 level anytime soon until we whittle through that supply and see some meaningful production cuts by OPEC and others. So oil is completely separate, in my opinion, from the metals right now. We're seeing the metals really serving the purpose that they do to the markets, which is offering a hedge against currency risk, the fiat currencies like the dollar and the euro, et cetera. And we're seeing a lot of investors shift money out of the dollar, out of the equity markets, and certainly bonds into the metals to diversify their portfolio and hedge against that risk. So they really serve two different purposes. The biggest drag on oil right now, though, is the oversupply that we're still whittling through and the lack of production cuts, meaningful production cuts. Until we get that, we probably see oil prices stay right around this area and continue to see the metals outperform oil.
And you're right that in such a low interest rate environment, precious metals do really have their appeal to investors as something which can withstand the market volatility. So what is your outlook for the precious metals for the rest of 2016?
Well, I'll be honest, we're very bullish actually at this stage. Now, the reason I say that is because even in the last cycle, when we saw gold and silver really perform well, we didn't get a lot of the big money, the big institutional money coming into the metals. And we're starting to see that. It's been very gradual, not so immediate. And that also is encouraging to me that we may see much higher prices for both metals and also some of the ultra precious metals and even rare earth metals, some of the rare earth metals that got beaten down. So we're seeing a lot of activity in these markets, but we could see a lot more. And we're certainly seeing strong buying out of places like China, which always are encouraging. So my prognosis for this right now at this stage is slow and steady wins the race, but you're going to start seeing more money pour into these sectors, probably into a lot of the mining stocks that have been beaten down as well, because they'll benefit from better margins. You are in a negative interest rate arena right now. And so, even though gold has no yield, it becomes attractive to investors who are looking for a haven and in a negative interest rate environment really aren't losing anything. So it's a positive win-win for anybody who's looking at least diversifying their portfolio, if not completely moving into.
So would you say, quickly to wrap things up, as a spokesperson for a commodity company in the United States, despite this dollar volatility that we are expecting to see around the US elections, that the safe haven of gold still will remain the safe haven?
Yeah, I think it is. And I always tell investors, being diversified is extremely important. It's the number one mission for any investor. That means hedging your currency risk, your Forex risk, your equities in something else besides more equities and more currency. So being diversified overall is key. And the same thing goes for not putting all your money in gold and silver. This could be a steady climb, but it may not be immediate. and it can be very volatile. We do have a lot of uncertainty, and that swings both ways. Once the election is over, there could be new Fed policy, and the dollar could get stronger. That's all possible, but I don't foresee that. I think they're stuck and mired in the same problems they've had. The EU has considerable problems, and we may see more turmoil there. So my outlook is that the precious metals will gain in value, but of course it could go the other way, so investors need to be cautious.
Fantastic. Well, Kevin, thank you so much for joining us on the line to provide your insights.
Thank you.
Well, that's all for myself and Kevin, but if you did like this interview, then do like and comment on dukascopy.tv.